Hello, it's on Sunday here. You're welcome back here to my today's video. The last video I actually touched the introduction to the Binance Futures wallet, how you can take your trade in the Binance Futures wallet, and how you can also set your stop loss and your take profit. If you did not watch this video or you would like to watch it, you check the description below for the link to the video. The link to the video will be right there in the description box. So in today's video, we'll be talking about the risk management. How do you take your risk management right here in Binance Futures wallet? So you have your leverage, you have your calculator here where you can actually calculate and know the actual amount of price you are going to make in profits and the actual amount of price you are willing to risk in a particular trade. So first of all, we'll be heading to how you can actually, if you are a complete beginner, you are just beginning to trade, and you are trading in the Binance futures, how you can actually take money into your Binance futures wallet. So we are going to touch that first. We'll touch that first, how you can actually transfer money from your sports wallet to your Binance futures wallet, and that is very simple. You can do that through this place. So you have here, you see your two green or two yellow arrows. You want to get to that word, then you actually point arrow to it so that you can see that. So you have these two yellow arrows right here. That two yellow arrows, you see that place. So you want to click on it. If you click on that two yellow arrows, you are heading to this place. So this is where you're going to see yourself. You have the sports wallet here, you have the USDM futures wallet. So you want to transfer some money, any amount of money you want to transfer. So you click on confirm and it is done. The money is right here. So that this one is just as simple as this. Just very simple as this. So we want to talk about the risk management today. So let's first of all, let's talk about the leverage. So let's talk about leverage first. Where you have your 10x, you have here, you see 10x. So this right here, so that is where we are going right here. We are going to that place. So you want to click on this leverage now. So you have from this is all the cryptocurrencies right here in Binance Futures Wallet do not have the same leverage. There are some coins that have from 1 to 20, and that is their maximum leverage. But Ethereum Classic right here has from 1x to 75x leverage. So you can actually select your leverage right here. So yeah, it is advisable you use 10x leverage in your trades. But if you are a good trader, you know you are trading very well, you can use any amount of leverage you want. You can actually use 75 if you know what you are doing. But it is very advisable you use a lowest leverage. So actually, normally you set your leverage to 10x right here. You can also use 30, you can use 45, but we'll be using 10x right here in this particular tutorial. So we are setting it to 10x level. You place on confirm. So how do you calculate the risk? How do you calculate it to know the actual amount you want to lose in a single trade? So we have here where you see your calculator. You have your calculator right here. So that place is where you have your calculator. You want to click on that calculator, and if you click on this calculator right here, this is where you are heading to. So let's assume we want to pick a long in this trade. We want to pick a long. So you want if Ethereum Classic price should get to $19. Let's use $19. It's actually trading at the $21.2. So you want, if you should get to 20, or call it 19. Ethereum Classic should get to $19. This is entry price. So at 19 price you want to enter, and then exit where you want to exit, because before you can actually trade here in the Binance futures, you must have good knowledge of technical analysis. This is where you have to analyze the market and see where you have your maybe a break of trend line or a kind of area of support, kind of area of resistance area. This is where you can actually predict your market, and then know where to set your target, know where to set your take profit, and then you also know where to set your stop loss in case the market goes against your prediction. So this area now you want to exit. Let's call it, you are calculating your risk right here now, how much you want to risk in this trade. So let's call it you want to enter. If it should come to 19, you want to enter, and then it should go up below 18. Below 18 you want to quit this trade. Let's call it you are using 100 USDT for this trade. So right here in this area here, you have where you see ETC. So you can actually, as it is now, it is in Ethereum Classic. So this is actually 100 quantity of Ethereum Classic. If you are calculating this way, you are going to get it wrong. So you want to switch it to USDT. So once you see it, so you click on that place, and then you click on USDT, and it has switched. So if you click on this now with this 20x leverage, call it reduce the leverage. You have here, you have your plus and minus right here. Click on minus until the leverage is set in a particular place that you want to take your trade. So you calculate it. If you click on calculate here, you can calculate. You see you're actually risking the profit and loss. Where you see P and L is actually that is profit and loss. So you have a 2 minus 5.26 USDT for this trade. So this is the amount you are risking in this trade. It is not actually a lose like this as it is. So this is the amount you are risking. Then your read to reward ratio is 52.63, and then the initial margin you need for this trade is 10 USDT. So if you want to reduce the margin here, you can use a 20x leverage. So you click on plus here, click on plus, maybe 19x. So let's call it 19. You can see 5.26. That is actually just the same amount you are using. So if you are using 19x leverage right here in this trade, you need the initial margin of 5.26 USDT to take this particular trade, and this trade is going to execute. If you are using the isolated margin order, if this particular trade should go against you, that is, if it goes against you, it means it actually crosses the $18 the 18 USDT market mark. So if it crosses that area, this is this price now will be triggered, and then you'll be stopped. Your trade will be stopped out. And then if let's call it the same, you also calculate your profits too. So as it is right now, you can also calculate your profit. So where you calculate your profit is the exit price. Where you have your exit price, you want to call it, you want it to get to 23 US dollars or 28 USDT. So if you get to 23 USDT, if you get to 23 USDT, you want to exit the trade. That is, you are exiting in profit. So you calculate how much are you going to make if this market should actually get to $23 USDT. So you can click on calculate here. You can see you have profit and loss of 21 USDT. So you are risking 5.26 USDT for 21 USDT. So if this trade should actually go your own way, that is a massive profit for you. So you can also reduce the quantity here if you are not willing to lose up to, if you are not willing to risk up to 22 or call it 5 USDT, you can come here and reduce the quantity of this coin you want to buy. You can use 70 USDT. So if you use 70 USDT, you are having $14.72 USDT in profit. So if you use this 70 USDT at 18 USDT, you have the risk of 3.68 USDT. So you are risking 3.68 USDT if this market should actually cross the 18 USDT market mark. So if it crosses this area, your 3.68 USDT will be triggered, and then that will be the lose you have for this trade. And then if your trade actually goes well and hit your target of 23 USDT, you have your 14.70 USDT in profit. So this is actually as simple as this. We're also going to take a look at the short side. When you calculate the short side, you can also calculate the long side. So let's click on the short side. So this is long, and then this is short, long and short. So if you want to short, I actually explained this in the last video. If you are going short in any coin, you are predicting that coin is going to have some kind of drop down. There's an area of target that you want this coin to drop down to, then you take your profit. You are predicting that this, maybe a coin has been in an upward trend, then touch some kind of a resistance area that you think, okay, this place is a strong resistance, this coin can no longer like go through this area, it can't go through this area, I can't go past this area. So I want to take a shot in this place because this coin will not go past this resistance area. And then you maybe call it, let's call it Ethereum Classic, let's assume Ethereum Classic has a 23 USDT at the area of resistance, and then this is the area of resistance. You know that if Ethereum Classic should get to this area, is going to bounce back to the downside. So you want to pick your shot, and then your exit price to calculate your loss here. You don't want Ethereum Classic to go past $24. So this is $24, and then your quantity you want to buy is 70. Let's just use 70. You can use any quantity you want based on your account size. So you want to pick a short. If Ethereum Classic get to 23 USDT, you want to pick a short at the quantity of 70 USDT. Then your exit price is 24. So if Ethereum Classic should rise past $23 and go to 24, your trade will be triggered, and then your stop loss will be hit. Your stop loss is going to be triggered, and then let's check the amount of money you are going to lose. So you lose $3 in this particular trade. You lose $3. So if you are using a quantity of 100 USDT, you are going to risk $4 for this trade. So the initial margin you have here, your own money you need here is 5.26 USDT. So this is your initial margin, 5.25 USD at the leverage of 19x. So you can reduce your leverage, you can add it. So everything here is just made very simple with Binance. So your profit too, also calculate your profit. Maybe you want to take your profit at 19. If you get to 19, if it comes down to 19, you want to take your profit. Remember, you are in the short side, you are selling. It's either short or sell, buy or long. So you are at the sell side, you are shorting this coin. So if you get to if you go into this particular trade at 23 USDT and it comes down to 19, you want to take your profit at 100 quantity USDT. So you click on calculate. So if you click on calculate, it's going to show you how much amount you are going to make if this particular trade hit your target. So you click on calculate and you are making 17.36 USDT in this particular trade. That's massive, guys. That's actually massive. So you can this is just as simple as this. This is how you can calculate your stop loss. This is how you can calculate your risk management. So this is where you manage your risk. So if you do not understand at first time of watching this, you can watch it and watch it again to make sure that you understand what you are actually doing. So when you understand this, you can manage your risk and know how much amount of money you are willing to risk in a particular trade. And then you also check your account size and make sure you don't risk more than 1 to 2% of your capital in your USDM futures wallet. So you don't want to go into, you don't want to risk 10% of your initial margin in a single trade. So you don't trade that way. So you are risking at least 1 to 3% of your initial margin, 1 to 3% of your total money in your USDM futures, just in case the trade did not go your way. If it goes against you, you are just using just small parts of your money. So this is just as simple as this. It's just as simple as this. So let's head to the margins and also take a look at the margins. So this is actually explained the margins here, the margins smooth right here in my last video. So the cross margin right here, if you are using cross margin to trade, it means that the whole amount of money that is inside your USDM futures right here is at stake. So if this coin, let's just assume some kind of news may just come out at any time, then news hits against this coin, and then this coin can, the crypto market is actually very, very volatile. So this coin now, it is quite possible this coin now can drop down to 15. But if this coin now can drop from here to 10, as it is now, the entire money inside this place is gone because you are actually on a cross margin. So when you are using cross margin, you are using everything inside this place, but you can also select your take profit and your stop loss in this place. But this one is not quite reliable because it is going to, if the market is quite volatile, it is going to hit past that particular place you set your stop loss. So let's call it you pick a long trade. Let's call it you pick a long trade at 19.00 USD, and then you have 100. Let's use 20x leverage. So let's say we are using 20x. We're using 20x for this trade, and then you are using quantity of 100 USDT that you are buying. So you want to set your TP, and you want if you should get to $23. So this particular first one here, you have TP and SL. So this first one is take profit. You can see it is written here, take profit. The second one is stop loss. So you want, if you should get to $23, you want to take your profit, and then if you should go below $18, you want to get stopped out in this trade. The initial margin you need in this particular trade is $5. That is 4.99. That is an approximately 5 USDT you need for this trade. So click on buy long. So when you click on buy long, you have all the information you need here that you are going to see. You can see the liquidation price where you are going to get liquidated to. But this is you click on buy. When you click on buy, this thing is open. So when this particular trade now is executed, let's assume the Ethereum Classic price just hit down now to $19. My trade here will be executed, and when this trade is executed, you are two orders. We have two orders right there. You have the take profit order, and then you have the stop loss order. Then from this take profit order and the stop loss order, each one, any one that executes first is going to cancel the other one. So if your take profit order hits first, the first order, the other stop loss order will be cancelled, and then your money, your profit will be here in your wallet waiting for you. And then if your stop loss hits first, you are going to, the amount you selected, the amount you have calculated for the risk is going to be gone, and then you meet your remaining money right inside the wallet. But if the market is quite volatile, it's not going to, that particular market is not going to execute right in that place. It might just hit small more lower before it can actually stop. So it is very, very advisable that you use your isolated margin for any kind of trade you want to trade. Or maybe there are some kind of trades that you don't have sorry, I have an open trade. So when you have open trade, you can actually switch margins. So in this particular trade now, you can't switch margin when you have open trade. So as this trade is open now, any trade, if you want to buy again, if maybe this thing actually hits past your this thing hits close to your stop loss and you want to buy again, you are still going to use cross margin. So you can't switch unless I cancel this trade right here. If I cancel this trade, I can now switch to isolated margin. You can see that it's switch very fast. So this is just all concerning the risk management. If you take this and take the steps I have given in this video, you can actually be a good and a successful trader. So if you have visited my channel for the first time today, I drop some contents like this sometimes twice in a week. Let's call it twice in a week, content like this in my channel. I also bring crypto news, cryptocurrency news, some good market news, the news that impact the crypto market. I share them here in my channel. So if you like this kind of content and some of this kind of educative content, click that subscribe button for me, and also turn on your notification bell so you get this kind of content each time I drop them. Thank you. See you in my next video.